This is the Scrap Metal and Commodities Recycling Report brought to you by Benlee, Roll-Off and Open-Top Trailers, as well as Raleigh and Goldsboro Metal Recycling. Today is Monday, November 2nd, 2015. My name is Greg Brown. Commodities continued falling last week, and we came across some incredibly disruptive data. U.S. steel production was slightly down and is at a multi-month low. This is troubling in that in September, steel imports to the U.S. were actually down 9.4% from August, so lower production in the U.S. is due to less U.S. consumption of steel here, not imports. U.S. oil drilling rigs, which use large amounts of steel, plunged in number last week for the 9th straight week, hitting a new 5.5-year low. The rig count is now down a staggering 66% from a year ago. When combined with gas rigs, drilling is at a 13.5-year low here in the United States. Scrap steel prices remain relatively flat at very low levels, which has reduced the amount of scrap coming into yards to the point that some steel mills reported last week having trouble filling orders. This could mean prices are firming. But we know there are some large amounts of scrap steel sitting in yards waiting for higher prices. With a good supply sitting, many believe prices could be down this month, but it is not yet clear how much. We came across this disturbing and disruptive chart showing average annual scrap steel prices from 1934, 81 years ago, to today. It shows that the largest annual drop in scrap steel prices ever was in 2009 at about $145 gross ton. The largest drop before that was 1974 at $60 a gross ton. This year the drop will be about $130, but unlike 2009, which was followed by a major rebound, many are forecasting next year could stay at the current levels. This would mean that the 2-year decline would be about $170 a gross ton. This would be the largest 2-year drop ever, literally in the more than 155 years of the U.S. steel industry. Lastly, this 2-year drop of about 50% is slightly more percentage-wise than the about 4-year 46% drop from 1997 through 2001. Copper prices declined all week, ending at a low. Some are forecasting prices could drift lower toward the end of the year. The 5-year copper price chart shows that prices for copper remain almost flat for the last 3 months at about 6+ year lows. Aluminum prices for the last month showed that aluminum declined for most of the week, ending at almost a low. When looking at aluminum for the last year, it has been declining in recent months, unlike copper, which has actually stabilized. Yet when looking at aluminum for the last 5 years, one can see that prices are also at 6+ year lows. There's been a lot of bad news in recent days. China released that their manufacturing rate contracted for the 3rd straight month. A major recycler in the Southeast had some major significant layoffs, and yet another scrap operation in the Southeast with a shredder filed for bankruptcy just last Friday. Commercial metals company, Schnitzer Steel, and Gerdau, all of which have major scrap metal recycling operations, all reported lower earnings last week. There are positives though. In October, the Dow Jones Industrial Average had its best monthly advance in 4 years, and the U.S. Fed, which sets interest rates, had a press release that was more positive about the global economy than they were just 2 months ago. Also, this chart that shows gasoline prices coming down, we continue to believe will help the U.S. and global economy. Gasoline is nicely below $2 a gallon in places like New Jersey and South Carolina, which will make for a positive holiday season for all. With that, we hope all have a safe and profitable week. My name is Greg Brown.